Hey, good afternoon, everyone. My name is Bill Levinson, managing partner with Levinson and Associates. And with me today, we have Joseph Loughran, our marketing vice president, and then we have our special guest speaker, Keith Birkin. So we have some great stuff to talk about today, as always. As you know, we try to pick a new concept, a new product training. By the way, if you guys can mute your phones, that would be great, just until we get started here. Okay, so we try to pick something that stands out, and the goal is to help our agents obviously make more sales and change their year for the better. So, and along those lines, if you have any ideas that you would like us to focus in on, and let's say it's maybe the scholarship program or the free websites that we offer, whatever the case is, lead programs, let us know too. We love feedback, comments, good or bad. So ultimately, we can make these even bigger and better for our agents. We know your time is valuable, especially 45 minutes in the middle of the week is very valuable time for everybody. So obviously, we want the most bang for the buck for everyone on the call. So yeah, give us feedback, good and bad, and our goal is to make these the best webinars that you can participate on in the insurance industry, and I think we've done a pretty good job of that. So, we go out there, we try to find what's new, what's hot, what's not, what's going to help you change your business for the better. And, this week we really wanted to dive in to One America. They have a awesome long-term care alternative product that is built in with life insurance, and it's kind of like a one-stop shop for long-term care and life. I don't want to steal any of Keith's thunder. He's going to dive into this a little more, but I will say that there's tons of money to be made in this long-term care arena. Okay, everyone wants to talk about this. No one wants to be stuck with the burden, as we know. So his solution fits that bill perfectly, and it's a great way to supplement your income. Okay, if you're a life agent, health agent, if you focus on annuities, this is a great alternative. And I promise you, by the time that you are done with today's training, if you listen to Keith, write down some notes on suggestions, comments, all about his product line, you will walk away with something and make more sales. I promise you, because we all have clients that would love to hear more about this type of product and need. So great stuff. And he's an awesome speaker. Everyone knows I'm a big Tony Robbins fan, and so is Keith. So we both think very positively all the time, great energy. So I know you're going to love what he has to bring to the table. Okay, moving forward here, we're always changing our iGenius platform for the better. Okay, we're out there every day finding the best technology, products, sales programs, lead programs to help our agents make more sales. And my personal promise to everybody on this call and all of our agents, for that matter, is we're not going to stop here. If there's a new piece of technology or product line that comes out to the industry, I'm going to be the first one to bring that to our agents. And if we're not, okay, because there is a small percentage of times that we're not first at bat, okay, I expect you guys and girls, let us know. Say, hey, I heard about this new product and somebody was marketing this. It looks fantastic, and I'll look into it, okay? And if it makes sense, and it is what it says it is, we're going to offer that product or program to our agents, okay? And that's our promise to you. And I think that the proof is in the pudding. We started this iGenius platform. It's been about 10 years now, and we started with just a few bullets. And today, we have probably 40 or 50 different bullets. In fact, what you're looking at is just some of the highlights, but we have an entire 60-minute video that just talks about all of the iGenius bullets, platform technology, everything available to you at your fingertips at no charge. Okay, so the iGenius platform is a complete turnkey sales platform designed to help you run your entire insurance business from one platform. Okay, and that's used loosely, because if you're on the annuity side and the health insurance side or even the security side where we really don't play, that's okay. You can still use all of our tools, our retail website, our lead generator and lead capture system for everything you're doing, not just with Levinson. Okay, even if you work with another IMO outside of us, that's fine too. Okay, we're confident. We know the contracts, the products that we have are the best in literally in the nation. So we know that ultimately you're going to want to park most of your business with us when it fits. So that's no problem at all. And I'll just mention a few of these bullets and then we'll move forward. And, you know, we have a lot of agents we'll talk to over the years, and they'll say, oh, my gosh, you know, I didn't know you had a mortgage lead program that's exclusive to your agents, or I didn't know you had lightning term or a scholarship program, or I didn't know you had a turnkey final expense sales system that's free to me. I had no idea this was available. Okay, so I encourage you to go on our website, click on the iGenius video, and it talks about all of the tools that are available to you and your downline, okay? And just remember, everything available to you, okay, is also available to anybody in your hierarchy. They have the same access that you have, which again brings value to your own hierarchy in your company because you're making those overrides. So just remember that as I'm talking, as Joe and Keith are talking, everything is available to you and everybody that reports to you. So great stuff there as well. Okay, I'm going to skip around just a little bit and point out, Joe, just back up for 1 second. I'm going to point out a couple of our hottest bullets and the most sizzle for 2017 that we've seen so far. The exclusive mortgage lead program, we just had our record week yesterday. Okay, we put in, our order form was the highest it has ever been in the 4 years that we have been running this program. So the proof is in the pudding there again. And just think about this, because the agents would not come back week after week or month after month if the program didn't work. Okay, so that's a co-opportunity. Take advantage of the mortgage lead program. In fact, we're having a webinar coming up with the creator and a guest speaker who is an agent that's using the program. So Joe's going to talk about that at the end of the call. That I wanted to point out. Also, the free agent websites. These days, if you don't have an agent website, okay, you are falling behind. So take advantage of the free websites. They have built-in quote engines, calculators, lead capture. There's even an e-app there that your client can fill out with you on the phone, or you can even send them the link. So it's really, really cool stuff. We even have a Facebook life quoter. We have social media packages that we put together. But take advantage of this stuff, especially if you're marketing to the millennials, because this is how they expect to communicate. They want fast. They want easy. They want online. And if you're not out there or you're not speaking the right language, so to speak, you're going to lose the sale. Okay, so very important stuff there. Scholarship marketing. So this is awesome and very simple. If me and Joe are both life insurance agents, and you know Joe's out there marketing and trying to sell term products, let's say, and I'm doing the same thing. We both have the same companies. The difference is I'm a Levinson agent and Joe is not. I'm giving my clients 1 free year scholarship to any of our 360 colleges across the country. Okay? There's a lot of value added there. Client doesn't pay any extra. You don't lose commissions. It's a no-brainer. So the point is, even if they like Joe better because he's better looking and has a better personality, they're going to buy from me every time because of the value added and that scholarship for little Johnny or Susie or even an unborn child. So that's a huge differentiator. Scholarship program is huge. And then I'll just talk about this last thing because I know we don't have much time. And again, take notes. Anything that you see that you want us to dive into after, we can do that as well. The new agency Automator platform is a game changer. We have already received awards on this platform. Okay, we're featured on the cover of Insurance Newsnet. Why? Just about this platform. The editor wanted to understand why we put this together and how it's working. So it is a game changer now and in the future. Agency Automator, we're going to show you what that looks like in 2 seconds here. Okay, moving forward, long-term care resources. So this is just a little screenshot, okay? If you've never even sold a long-term care policy, okay, no problem. We are here for you. We put together marketing materials for your clients, for you, product brochures. We even have a dedicated LTC specialist in-house. That's Deborah Cohen at extension 17. You can email, call her anytime. Her job is to make sure that you are comfortable in selling long-term care insurance. Now, as far as Keith's product that he's going to talk about today, which has life insurance built in, any one of our marketers can help you. Okay, if you want to bring up maybe life insurance with living benefit riders, long-term care riders, anyone can help you. But standalone long-term care, Deborah is your resource, your go-to. She knows it all, and we have all of the most competitive products. But I will say this, after you hear what Keith has to say, I think everyone's going to be a big believer in this One America platform. So everything is available at your fingertips. If you look at that blue box there, scroll over marketing, it says long-term care, and everything is available to you. We even have a quote engine. We can send out quotes as fast as you can put the information in. Videos you can put on your Facebook page and market. Everything is available right there in real time. Okay, moving forward, the Agency Automator platform. And Joe, do me a favor. Let's go also to the next slide there. Okay, we have been, there you go, perfect. We've been working on this so far for about a year and a half. We've been through a lot of obstacles with this platform. Finally, as of about 6 to 8 weeks ago, we launched the official Agency Automator platform, and this is changing the game. It's changing the way an agent conducts his or her own business, and it's changing the way and allowing a regular street agent to recruit and build their own hierarchy. Okay, why not obviously focus on your day-to-day sales, make those commissions, but have a few agents in the background where you're collecting 5, 10, 15% of an override as we're doing the work for you. All you're doing is making the referral and using Agency Automator Plus. So I'll just tell you real quick in a nutshell, if you saw some of our advertisements about this webinar, you saw how we're marketing and we're pitching how you can speak to 1,000 long-term care prospects a month for free. So that's Agency Automator. On the left side, it's the base Agency Automator system. That's your CRM tool. That's where you're going to do all of your day-to-day activity, notes, calendars, reminders. Everything's built into one dashboard. There also is the prospecting side. That's where you're going to go in and you can dial in the criteria, and you're going to get 1,000 prospects per month that you can market to and share your story. You can put in different age ranges, different income ranges. You can say, I only want to work in this zip code, and the system will spit out 1,000 names, numbers, emails, addresses, everything at your fingertips. We even put together a library full of different marketing pieces that you can blast or mail out. We even have phone pitches that you can talk all about long-term care or mortgage protection, you know, whatever you're pitching for that month. Everything is built in. We have 2 weekly live trainings, so I suggest hopping on one of those trainings and really getting your arms around this. It's free. If you're active with us and you're writing at least $1,000 a year of annualized premium, we pay for the entire platform. Okay, so there's no charge, no activation, no nothing. On the right side, Agency Automator Plus, it's a similar mindset, okay, where you're going to go in, okay, and we have an entire library built around recruiting. So this is where you can go in and access over 400,000 licensed agents. You can dial, again, zip code. You can say, I only want FINRA registered reps, or I only want agents who are health insurance licensed. You put in whatever information you want. The system spits out agents' names, numbers, emails, everything that you need. So now you can market to this database, okay, and start to build your own downline. So this is a no-brainer, and we have all of the material, the tools, technology that you can go out and market to them about. So just think about everything you're seeing and hearing. Okay, you're going to deliver the same message to these agents, and you're going to call or send us an email. Hey, Bill, Mark Smith is ready to go. He responded to my e-blast. We'll make the call. We do all of the work for you. You just go into our website, put in your password. You can look at all of your business and all of your downline's business, all in real time, so you know exactly what commission and what override you're getting for the month. So this is a way to grow your business in 2017, and we already did all of the hard work for you. It's done. Agency Automator and Agency Automator Plus, the recruiting version. Okay, let's move forward here. Joe's going to show you just how you can use some of Keith's ideas and long-term care to deliver your message to those 1,000 prospects every single month at no charge. Joe?
Yeah, thanks, Bill. So, of course, we're going to be introducing Keith on the very, very next slide. And I think after you hear what Keith has to say, you know, and some of the product solutions and really some new angles you can take to generate some new production, the first question is, well, great, how am I going to find people that are going to be right for this product? What's a better way for me to get in front of people? And that's the Agency Automator tool. What I did here is I had a little conversation with Keith before the webinar, and we really talked about the specific demographic of where this product is really making a difference, where the company's seeing a lot of the sales come from. And as Keith will dive into, there's a wide age range, but really looking at ages 60 to 75. I use the Agency Automator platform. I actually put in the zip code for the office here. I did a 50-mile radius. I looked at people between the ages of 60 and 75 with a net worth of at least $250,000 or more. And you'll see at the bottom right-hand side, it gave me just over 15,000 people. So I wanted to show everybody by using the Agency Automator and really even pairing this product together that Keith's going to go over, you have the people that you can get in front of. This CRM tool, this prospecting tool, is going to allow you to actually narrow down the demographics. You can even pick a 10-mile radius. It's going to give you all their contact information. And then what you can do is use that email marketing tool inside of Agency Automator to actually drip market on that client. You'll receive their phone numbers, their addresses. You'll be able to call them and follow up on those emails that you're sending them for this specific product. So it's not just a great product, but a great way to get in front of more people. Very, very simple to do. That literally took me a matter of about 3.5 minutes to go through that entire list and find those 15,000 plus people. So very easily done, and we do have trainings we're going to cover on the Automator to really help you make that happen.
Thank you, Joe. Yeah, that Automator, as you can see, it's a no-brainer. There's no charge to all of our active agents, and this is a great way to get your foot in the door, share your story, because that's the name of the game, as we all know. Okay, so without further ado, we're going to dive into today's presentation. I'll just say quickly that One America is a fairly new company for us. We just signed a direct IMO contract, okay, which allows direct access, which is great for everybody. And I guess the main reason why we were so excited about what One America brings to the table, it's very unique, very niche products. And Keith, I've known for many, many years, good friend in the business and really knows his stuff. So we love to feature Keith on our webinars and live at our expo. And I will say with One America, it really is the future of long-term care. Okay, so sit back, relax, enjoy his presentation. Without further ado, Keith Birkin, One America.
Great, thank you. And you can hear me, right?
Yep, we can hear you, Keith.
Okay, fantastic. First of all, I want to take a minute and say thank you to Bill and Joe for having me on the call today. I always appreciate time with you guys and appreciate time in front of your agents. And, you know, anytime I do one of these, whether it's a webinar or one of your expos, which, as Bill said, we've been doing for years, I am so blown away at the level of service and to the depth that you guys always go to add value to your agents and what you guys do. I'm doing this a long time, wholesaling as an insurance rep in the industry, and I've seen agencies of all shapes and sizes, and I can tell you there's a handful that are always at the cutting edge of technology and the platforms that you guys provide to your agents, from leads and marketing and just adding value from, what's new going on in the industry. So at the risk of sounding obsequious, once again, you guys are always kind of leading the charge and blazing the trail of what's new and what's going on out there. So I'll tell you, for those agents on the call today, you've been doing business with Carrie Levinson. I know you know this for yourselves, but you're very lucky and you're in exceptional hands. So as Bill pointed out, I'm going to show you some very unique financial solutions today regarding, of course, and pertaining to long-term care. You're going to hear things like using a single premium to cover 2 lives with a linked benefit product. That's nowhere out there right now. We actually have a patent on that. Here are things like using qualified money to fund linked benefit products. There's no product out there like that right now. Guaranteed premiums. One of the biggest hits right now on the traditional LTC industry is the fact that premiums are constantly going up and they're skyrocketing, for that matter. So imagine guaranteed premiums that are level and steady and can never increase. Or lifetime, unlimited benefits. Nobody's offering anything like that. Or how about for your clients with annuities that have sizable or even modest gains, and that they used those annuities for long-term care, they're going to pay tax on them. The ability to wash out those taxes, and on top of that, even get 2, 3, 4, 5 times leverage on their investment, 100% tax-free for long-term care. All pretty unique and very interesting financial solutions, not even long-term care solutions, but financial solutions. But yes, they do all have the common denominator of the fact that they are for long-term care. And I don't ever like to go into a presentation, even talking about products, without touching on how to talk about the problem of long-term care and what it represents. Let's see, am I moving? There we go. And it's an expensive problem. We know that, right? I'm not going to spend more than 5 to 7 minutes on this, but it's extremely important. The reason why I do this is you're going to see these products. You're going to understand them, and you're going to want to start writing them because long-term care, especially in South Florida, regardless of where you guys are, it's a problem, and we know that. But to go out and just show your clients a hypo or an illustration and talk about the benefits they're going to get for the premiums that they have and so on and so forth, using just statistics and dollars and cost and averages, I could promise you, doing this for 15 years is not the way to sell it. But let's talk about that for a minute just so you understand what we're dealing with. It's a problem and an expensive one. It's almost $90,000 a year in today's dollars. Here we're showing you, based on Genworth's cost of care survey from 2014, a semi-private room in a nursing home is over 87 grand. If you're looking at, let's say, a modest index of 3.5% of inflation, and we know it's even more than that, and that's actually now exceeding education's inflation index, 10 years down the road, we're looking at almost 125 grand for 1 year of long-term care. 20 years down the road, almost $175,000. So yes, it's a very expensive problem. So for your clients who are telling you they can self-insure, they're sitting on $500,000, $600,000, $700,000, they're not really worried about this. Look what happens when you start using the averages of length of care as well, and we'll go into that in a second. But these numbers that I'm showing you, these increases over the next 10 and 20 years, it's really not telling you the whole story. This is just assuming if prices are going up at 3.5%. The problem is there's 4 things that are going to happen in the next 10 years. They're going to increase the price even more. And the first is baby boomers, the biggest segment of our population, 80 million people. The first wave of baby boomers hit 70 last year. 10,000 people a day are turning age 70. So the biggest segment of our population is going to start hitting their 80s in the next 10 years, creating an even bigger dissonance between supply and demand, driving the cost of long-term care up even more. Then you have medical technology. Folks, this is actually a good problem because things that were killing us 30 years ago are today considered chronic conditions. We're living into our 80s, dramatically increasing the chances that we're going to need long-term care, thus, of course, driving the price up even more. And then you have family dynamics. 75% of all long-term care is provided at home. But to me, the more staggering number is that 70% of all care provided at home is done by family members. And that's why people are buying the policy, because they don't want to burden those family members. But the real problem is that mom and dad are living in South Florida, as we know, those of us living in South Florida, and the kids are in Chicago and New York, which is obviously changing how the family dynamics are. And the last, of course, is government. Look, 40% of all long-term care is paid for by Medicaid, and 42% of all of Medicaid spending goes towards long-term care. And I think most of us know who, and I'm not at all getting political here, but the government and the administrations consistently are looking at the entitlement programs, and who knows what's going to happen in the next 10 to 15 years, how these entitlement programs are going to change. And we were just looking at a year of care. Average length of care for a man is 2.2 years. You're talking in 10 years down the road, it's almost 400 grand. For a woman, it's almost 4 years, right? 3.7. And for average length of care, in 10 years, we're looking at almost 650 grand. People with Alzheimer's will live 8 to 20 years with it. You're looking at long-term care costs exceeding almost $1.4 million. So even for your clients who feel they're strong enough to self-insure, and again, I have this conversation because you might get some of those objections. Alzheimer's, which by the way leads the charge, almost 40% of all long-term care claims are related to organic brain disorders like Alzheimer's, Parkinson's, senility, dementia. Something like that will wipe out even the strongest financial portfolio, or some of the stronger ones, of course. But the real problem is that most people think it's not going to happen to them. And there's about a 70% chance it will. 7 out of 10 of us are going to need some kind of long-term care. The problem is everyone thinks they're in the 30%. And by the way, nursing homes are filled with people that thought they'd be in the 30%. So before I go into the products, what I want to leave you with is, how do you start the conversation about long-term care and long-term care planning with your clients? Honestly, it has nothing to do with the statistics, the money, or the percentages I just showed you. You do it by simply asking them 2 questions. The first, you know, Mr. and Mrs. Jones, you might never need this. You might never need long-term care. But God forbid if you did, have you considered the impact it's going to have on your family, the very people you always swore that you protect for their entire lives? And the second question is, if you needed long-term care, do you have a plan in place? And more importantly, how are you going to pay for it? Because nothing pays for this except your own income, your own assets that you've allocated for retirement and, of course, for legacy planning. And that leads us right and directly into the linked benefit sale, the asset-based approach. Historically, if you needed long-term care, it was traditional LTC. The idea now is to go, and which is a very shrinking market, by the way, traditional LTC, is looking at the asset-based approach. Why do people love this? First of all, because they're not really buying anything. What you're really doing is you're taking money that's in their left pocket and repurposing it. You're re-intentioning it, but just shifting it over to their right pocket. And what you're doing is you're finding a portion of their portfolio that they've generally dog-eared or earmarked for emergency fund or what have you that's underperforming, and you're going to take that portion of their portfolio and you're going to repurpose it. And for that, in this example, there's $125,000. You'll get cash value, death benefit, long-term care benefit, and with us, a lifetime benefit of long-term care that can never run out. So I'll get off my soapbox, but before I go into our products, I always like to hit on this, because to go out and just talk to your clients from the angle of, I have a phenomenal financial solution that offers guarantees, death benefit, LTC, all the bells and whistles, all the unique solutions, but not address the real issue that they're buying this to protect their family, and how to start the conversation, to me, I feel is doing a disjustice. And what you're doing, of course, ultimately is protecting their portfolio. All right, so let's jump into the good stuff. Here's our product suite. Yes, I actually have 9 products I'm going to show you, but honestly, it's not really 9 products. These bottom 2 products, legacy care, media care, I'm literally going to spend 45 seconds on those. So then we have our asset care product suite, which is our whole life insurance linked to long-term care, but it's showing you we have 4 products here, right? Really, it's not. It's one product funded 4 different ways. You see, we have our single premium, our annual premium, and then we have our qualified products, and we'll talk about that. And then we have our annuity care products. But honestly, once you understand how even just the first one that I bring you into works in base, in concept, you're going to understand all of them. And my hopefully my takeaway for you guys today is to not come away understanding all the ins and outs, because I'm not even going to go through all the ins and outs of the product with you today, is that you come away knowing where your opportunity is, knowing that for your clients with qualified money, you have an opportunity for that. For your clients that are maybe more income heavy but not as asset heavy, there's an opportunity there. For your clients that have cash value and life policies but have no LTC coverage, or clients that have a traditional LTC policy right now and they're getting rate increases and they're sick of the instability in the industry, we have something for that. And people who want lifetime LTC benefits, just walking away today knowing where your opportunity is, and then you'll call Carrie Levinson, and you'll talk to Deb or Joe or Bill, whoever you're working with there, and of course they'll run you through this in more detail and get you a quote. But you're going to understand how it works, but don't worry about trying to remember all this. So let's jump right in. We're going to start with the asset care products. These are whole life linked to long-term care. And what you want to remember about all of them is, number one, they work on either an individual or a couple. And we really call that a joint life contract, because with us, they do not have to be married. It's any insurable interest. Husband, wife, of course, that's great, but any family member, business partners, people in relationship, living together, same-sex or not, any insurable interest is going to work. We also work on a joint equal age. So if you have a husband who's 80 and a wife who's 70, maybe it brings it down to like 74, 75. It's an interesting formula we use, a little heavy, more heavily weighted towards the woman in a relationship. So let's, did you have a question? Okay. So let's jump right in and start by taking a look at Asset Care 1. And again, I'll spend a little more time on this, because once you understand how this works, you're really going to understand how all of the products work, and then we'll just fit the pieces together. So in this example, we have a couple that have a joint age of 64. And this is Asset Care 1, which is our single premium approach. So this couple is going to take $125,000 and invest this into this, and for that, we're going to give them a death benefit of $250,000. Now, where we're very different is we're taking a couple, and with most linked benefit products that work on single premium, you'll have to put up a single premium for each of them. With us, you don't have to do that. Why are we able to do that? Because this death benefit is based on joint life second to die. So we're only going to pay that out to a beneficiary when both of them pass away, which is fine. No one really cares because no one's buying this for the death benefit. That's really just a guarantee. So they're going to put up $125,000. It's going to cover them both, of a death benefit of $250,000. Now, if they need this for long-term care purposes, the first pool of money that they're going to use is this death benefit. And they have a few different ways, a few different options on how that'll pay out over a period of months, 25, 33, or 50. Here we're showing it over 50 months. And just by using simple division, they're going to get $5,000 a month per person until basically this $250,000 has been exhausted. Now, this ain't bad. I mean, they're getting $250,000. That's a death benefit, or $250,000, which can be used for long-term care, but it's certainly not the reason they're buying this policy. It's a nice starter point, but $250,000 can easily go on one person, and most likely probably will not cover two. They're not buying it for that. They could probably insure for $250,000 on their own. This is what I call insuring for the garage on fire. They want to insure for the house on fire. So when you buy your policy, you get to choose what we call a continuation of benefit rider, which is going to give you an additional pool of long-term care benefits. And your choices are to go with another amount equal to your death benefit, so in this example, another $250,000 of long-term care benefit, or, and with us, this is our big differentiator, a lifetime benefit that can never, ever run out, meaning they'll each get $5,000 a month, so it's $10,000 total if they're both on claim at the same time in perpetuity. It can never, ever run out. Nobody has anything like that. How do you get this rider? Very simple. You pay annual premium payments on it. And in this example, to get the $250 option, you'd be looking at about $850 a year. Show me anywhere where you can get $250,000 in long-term care benefits for $1,000 or less. To get the lifetime benefit, you're looking at about $1,250 a year. Now, these numbers are about 10% off. They're all rounded for purposes of illustration and making it easier to explain, but still they're pretty darn close to actual numbers you're going to see. Now, you do have the option of, instead of paying annual premiums, these can be done over a 10-pay period, or you can do a lump sum on this for your clients who are very asset heavy and they say, you know what, I got a couple $100 grand and let me put 150 in the base and 50 over here in the rider. You're able to do that. But what I want you to get is this is the base and this is the rider. And there's three things you always want to remember about the base. The first being, any premiums that come in here are liquid. This is where you have real equity. You get this money back. Number two, this is always where your death benefit is. And number three, it's always the first pool of money that's used to pay for long-term care. We're going to use that death benefit. The rider, any premiums that come in here are gone, kind of like traditional long-term care insurance. It's the use it or lose it approach. And a great way that I like to, a metaphor that I like to use is, imagine this is a car that you can buy and 10 years later down the road you sell it, it has actual equity, and over here the rider is kind of like the extended warranty. It has no equity. If you sell the car, it has no value. But I'll tell you, when your car is over its 50,000 and for a year and you have to rebuild that engine, you are ecstatic you have the warranty. So this is Asset Care 1, and it's working on a single premium approach coming in, and it's available for people between the ages of 40 and 80. And this is what it would look like on an illustration, and basically there's only 2 pages you'll ever want to show on an illustration, even though it's a 15-page document. It's this one. Basically, it's going to tell you everything you need to know about the product. Here's your premium coming in. Here's your death benefit. Here is the payout period you chose, 50 months, the monthly benefit. If you wanted inflation protection, which you can get on the base and or the rider, and over here is your elimination period. The only other page you're really going to want to show on an illustration is the chart page. And the way I like to explain these is, look, there's only 3 things that are going to happen with this policy: live, quit, or die. You're going to live and use it for long-term care. You're going to quit and take your money back, or you're going to die and we'll give you a death benefit. And every column on our illustration explains one of those options: live, quit, or die. This one is just showing you the base. This column here is showing you the death benefit. It's your die column. But remember, your death benefit is also your first pool of money for long-term care. So it's also your live column. Here's your quit column, your cash surrender value. Year 1, you're getting all your money back. As we talked about, your money is liquid. And then your accumulated value, that's your cash value. This is what the actual cash value is, based on purposes of loans, but it's not the money you get back if you surrender. That's over here. And this is just showing you if you got the rider, which of course everyone does. 90% of our policies are issued base plus rider. And this is showing you this column, if you got the base and the rider and you made annual payments. That's why it's about almost $1,240 a year. And this is showing you if you bought the base and the rider all together, one single payment for all of it. So instead of it being $126 and the rider being $1,240 a year, it's just $146. So basically it's $20,000 one-time single premium up front to buy that rider. And of course that $20,000 is gone. There's no liquidity to it. But remember, you're buying a lifetime benefit, $5,000 a year each, or a little more than that, that can never, ever run out. No one has anything like this. That's called Asset Care 1. And I showed you the 50-month option. You can have the base payout over 33 months or 25 months. And whatever you choose on the base, as far as your payout for long-term care, that is your option on the rider or lifetime. And again, don't worry about remembering all that kind of stuff. Just remember, hey, it's single premium. It's joint life second to die. Oh, by the way, one thing I didn't mention, these premiums, these annual premiums, they are guaranteed. They can never, ever go up. The 3 big differentiators between our product and any other carriers: number 1, our premiums are non-cancelable, guaranteed, renewable. So we're not telling you that they've never gone up. We're telling you they can't ever go up. That's number 1. Number 2, our products are joint life second to die. We're the only company that has that. One single premium covering 2 people. And number 3, we have a lifetime benefit, LTC benefits that can never, ever run out. And that holds true for all of our 4 Asset Care products. So that's Asset Care 1. Let's skip Asset Care 2 and go right to Asset Care 3. Why are we doing that? Because 2 and 3 are exactly the same. The only difference, Asset Care 3 is working with qualified money, money that's coming from a 401k, an IRA, a 403b. This is fastly becoming one of our most popular products because people are so often heavily invested in qualified money, and they love to be able to use that money available to them to pay for LTC premiums. So let's show you how this works. And remember in the beginning I said, look, it's all the same product, just funded differently. Doesn't this look exactly as what I showed you a minute ago with Asset Care 1? Here's your death benefit, which is your first pool for long-term care. You can get 50, 33, or 25 months. Over here you can get your rider, which will make annual premiums. It's exactly what I showed you a moment ago. The difference is, in this example, the $125,000 coming in to fund this is not coming in one single premium, and it's not coming directly. In this example, we're going to pull $125,000 out of a gentleman's 401k. And what I want you to imagine is that I'm showing you an hourglass here. Imagine the top half of this hourglass is an annuity sitting in an IRA with One America. And the bottom half of this hourglass is this joint life, second to die, whole life linked to long-term care policy, but it's now a 20-pay. So what we're going to do in essence is pull $125,000 out of this guy's 401k and drop it into our annuity. It's just a regular fixed deferred annuity earning 3% in our IRA at One America. And what we're going to do is every year for 20 years take a withdrawal out of it at 6.5%. So in this example, that's $8,000. So year one, we take out $8,000 from the IRA. It's a withdrawal, so there is a tax consequence to that. But hey, for your clients that are over 70.5, this is going to satisfy, or at least a portion of the required minimum distributions, and they love that. They hate taking them. They love knowing, hey, I'm doing this and I'm getting an LTC policy for that. Phenomenal. So we pulled out $8,000 from the IRA that is taxable. In year one, it hits the life policy, LTC policy, and creates an immediate usable LTC benefit / death benefit of $133,000. Now the annuity went from $125,000 down to $117,000 because we pulled $8,000 out of it. So in essence, what's going to happen is over 20 years, we're going to pull $8,000 out every year. This death benefit is going to ultimately grow up to $250,000. That's going to be a tax-free death benefit usable for long-term care, and the annuity, of course, will drain down to $0. Now, if you go on claim before the 20-year funding period, what will happen is benefits will be paid out proportionately from the LTC life policy as well as the annuity, and anything that comes out of down here, the LTC life policy, will be 100% tax-free, and anything from the annuity is taxable. Now, this is available to people between the ages of 59.5 up to 80, and of course we do that for obvious reasons, because this withdrawal every year is taxable. We don't want our clients taking the 10% penalty on that as well, so we market it from 59.5 up to age 80. Asset Care 2 works identical to this, except it works with non-qualified money. There's not a whole heck of a lot of uses for it if they're coming from an annuity, but we prefer them to go in our annuity products anyway, or if they're coming from a life policy that's on an individual and they want to go to a joint policy. You always have to go like to like. That's the only other reason why you go Asset Care 2. So let's move on to Asset Care 4. By the way, while we're doing this, I want to take a second and I tell you the best learning opportunities often that we get are from questions that are asked from you guys. So be sure as we're going through this, if you have questions, look at your GoToWebinar control panel. There's an opportunity for you to type questions in there, and I'm happy to answer them at the end. But try to get those in now so we're not hit with dead silence. Please ask your questions. Like I said, some of the best learning opportunities. So here's Asset Care 4. Looks very similar to what I just showed you with Asset Care 1 and 3, right? Here's your base. Any premiums that come in your base are liquid. Here's also where your death benefit is. This is also your first pool of long-term care comes for your death benefit. Over here is your rider. And again, you can get 25, 33, 50 months. It's all the same thing. The only difference is instead of this being funded with a single premium, you're going to fund this, which is very similar to traditional LTC, by paying annual premiums. Although we're one of the only carriers I know that still has limited pay options like 10-pay and 20-pay and so on, and you have those options here as well. So here's a couple that are a joint age of 55, and we're showing a very small policy, but again, it's just for illustration purposes and explanation. They're putting in $2,000 and change a year, $2,040, and for that they're getting a death benefit of $100,000. They're choosing a 25-month payout, which is giving them $4,000 per month per person for long-term care. That's $8,000 total. They go on claim together. Then they can come over here and get their rider, and again, their options are to get an amount equal to their death benefit, so another 100 grand, or a lifetime benefit that'll never run out, meaning $4,000 per month per person in perpetuity. How do you get this rider? Same as the other products. You pay annual premium payments. But this is where we're so different. We have an enormous amount of premium flexibility, meaning on the base product, you can pay this through annual premiums. You can do this through 10 pay, all the way up through 20 pay. You can choose a 14 pay. You can choose a 16 pay, whatever you like. On the rider, this could be annual pay, 10 pay, 20 pay, or even lump sum. But remember, and this is the big difference maker with us, any premiums on the base, any premiums on the rider are 100% guaranteed. They can never increase. Any premiums on the base, even on the pay-as-you-go, have liquidity. You can get them back. There's a death benefit here. So if you're showing traditional long-term care insurance still to your clients, you absolutely have to show this along with it, because we're offering lifetime benefits. Nobody has that. We're offering guaranteed premiums. Nobody has that. We're offering liquidity on your premiums. No traditional LTC carrier is offering that, and we're offering you a death benefit on top of it. It's win, 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 win any way you go. Will you be paying about 15 to 20% more in more premium to get this product? Absolutely, but you're getting so much more. First of all, you're probably going to be getting a bigger monthly LTC benefit on top of it, but you have liquidity, death benefit, guaranteed lifetime benefits, everything you could ask for in a product. So you want to compare this. If you're showing traditional, give them the opportunity to see it. I have a lot of agents that are positioning this saying, look, pay the 15% up front now, because 10 to 15 years down the road, who knows what the LTC carrier is going to be charging you. Rather know it ahead of time. So those are the asset care products. Now I want to talk about the annuity care products, which in concept look a little similar to the asset care products, but of course these are on an annuity chassis. And let me tell you something. There is an enormous opportunity here. There are currently $3 trillion out there now in non-qualified annuity, and the government did a Gallup poll and found that nearly 80% of them are not being used for income. They were purchased for emergency situations, crisis situations, things like long-term care. So there's a huge opportunity out there. And the invention or the launch of the Pension Protection Act only further proliferated the need or the ability to use these annuities to wash out gains and taxes that you would pay. And we'll talk about what I mean right now. Here's a typical annuity. In this example, here's an annuity worth $150,000, right? They put in $50,000. That was the cost basis. It gained $100,000 over time. It's now worth $150,000. If they were to use this annuity to pay for long-term care expenses, they're going to pay taxes on these gains, on this $100,000. It's always, with annuities, it's always LIFO, last in, first out. Well, the Pension Protection Act allowed for the invention of PPA HIPAA-eligible annuities. So the idea is, rather than keeping these annuities that are not being used for income, they're there for crisis situations, mostly things like long-term care, paying taxes on the gains, do a 1035 exchange and roll that annuity into a PPA-eligible HIPAA-qualified annuity and wipe out all of those taxes that you would pay on the gains and get 2, 3, 4, 5 times your leverage on top of that as well. So that's exactly what we did. The Pension Protection Act went live in 2010, and we launched our first annuity care product that was PPA eligible in 2010 along with it. We called it Annuity Care 1, and it works very similar to the other products. Here's your base. You put money into your base. It's just a pretty vanilla fixed deferred annuity earning 1.4% on cash, 1.9% for long-term care growth. If you need it for long-term care, it'll pay out over 36 months. This will work on an individual. It also work on a couple. And with a couple, by the way, they do have to be married. They have to be spouse. This will not work any insurable interest. And once you buy the base, you have the option of getting a rider, which you'll pay annual premiums on. And again, your options are another 36 months or a lifetime benefit. You could also pay one single premium as well. What most people are doing is they're coming from existing annuities they already have generally into these products. And here's a perfect example. Here's an 81-year-old female. She currently has an annuity worth $125,000, where a good majority of that are gains. Now, she's got a nice guaranteed rate of 3%. There's really nothing you can do with that right now. You're not seeing interest rates on annuities at 3% right now, so she's kind of stuck in this. And if she needs this for long-term care, this is a ticking tax time bomb. She's going to pay taxes on that. So what she decides to do is cash in that annuity, or excuse me, do a 1035 exchange into our PPA-eligible HIPAA-qualified annuity. Now, what most people are doing when they're coming from an existing annuity, they don't want to deal with putting annual premiums into the rider. So she's got $125,000. She's going to put $102,500 into the base, which is going to give her, split out over 36 months, $36,000 a year, tax-free for long-term care, and she's going to put the remaining $22,500 into the rider, giving her a lifetime benefit. So what we've essentially done is we took an 81-year-old female that had an annuity worth $125,000, only getting 3%. Most of this taxable, she needs it for long-term care, turned that into $36,000 a year, tax-free for long-term care for the rest of her life. And what we've done is we're keeping $102,500 of it liquid, minus surrender charges for the first 9 years. If she dies and never uses it, of course, it's an annuity. We'll pay this out to a beneficiary. And of course, if she needs this for long-term care, she's getting $36,000 for the rest of her life. Show me an annuity that can do that. This is available for people up to the ages of 85, starting at the age of 50. So we said, all right, this is a good product. It was our first stab at it, but we realized most people are not wanting, if they're coming from an existing annuity, they don't like the idea of breaking their annuity up because only the 102 was liquid, and they don't want to put the 125 over here and make annual premium payments on this. They kind of want to keep it all intact. So we said, let's come up with something better. Let's come up with an annuity product where that additional rider of long-term care benefits is actually included, and that's what we did. So we came up with Annuity Care 2, and the way this works is, and I'll show you an example, you put money in the base over here, and then you get to choose, included, an additional pool, additional riders for long-term care, another 36, 72, or 108 months. How are we able to do that? Because what we're going to do is take monthly charges off of the base of this annuity, which grows at 1.4% for cash and 1.9% for LTC value. We're going to take charges off the base to pay for the additional LTC rider that you're going to get. And we'll show you how that looks. This also, of course, is available for couples. And this is, we'll write this up to the age of 80. And that's actually why the woman in the previous example didn't go with this product. She was 81. She had to go with the Annuity Care 1. And what it really works out to is if you go with the 36-month rider, it's basically whatever your base grows to, your total pool of money would be 2.5 times that for LTC. If you chose the 72-month option, whatever your base grows to, your total pool of money would be 4 times that. Amazing leverage on your dollar. Let's show you what this really looks like. Let's use an example of a guy that has $150,000 sitting in annuity. Let's say $80,000 of that was gains and taxable. What he's going to do is take his $150,000 and drop it into Annuity Care 2. At the end of year 1, that $150,000, because of the interest rate, is going to grow to $152,000 and change. So if he needs this for long-term care, his first pool is that $152,000. Well, over here you see he chose the 72-month rider. So we're going to give him an additional pool of $457,000 of long-term care, giving him a total long-term care benefit of nearly $610,000, and the monthly benefit per person, if they need this, is $6,351. Although this is just done on a single person. So we took $150,000, of which $80,000 would be taxable, turned it into over $600,000, 100% tax-free for long-term care. Unbelievable leverage on his money, taking an asset that he wasn't using, he was using for a crisis situation, giving him 4 times its value, making it all tax-free, keeping it liquid. If it's not used, you pay it out to a named beneficiary. This is what it looks like on an illustration. Same rules apply, right? Live, quit, or die. It's the only thing that are going to happen with these policies. Every column tells that story. These 4 columns are the live column. Live and use it for care, right? Here's your LTC accumulated value going up at 1.9%. So year 1, it's worth $152,000. Let's skip down to year 10. His LTC value is now worth $174,000. That's his first pull for LTC. Then we have our continuation of benefit balance. After he goes to the 174, he'll get an additional $524,000 for long-term care. Over here is the total long-term care balance, the sum of these two columns. At year 10, we're giving him nearly $700,000 long-term care, and his monthly benefit is almost $7,300 a month. Here's his cash surrender value if he quits and wants his money back, and here's his cash value, which is what will pay out upon death to a beneficiary. Phenomenal leverage on his money. The last product I want to talk to you about is the indexed annuity care product. A little more tricky to explain, but what I like to do is take out all of the elements that have any sophistication to it, because quite honestly, they're not at all important. And I know many of you are selling indexed annuity products. The first thing I want to highlight to you is this is an indexed annuity product used for long-term care, not for income. So I don't even go into the financial strategies or the /income strategies because it's not for income. So I'm not going to talk to you about the point-to-points, the pars, the caps, or any of the strategies. As a matter of fact, I urge you to not do that with your clients either. There's two things that you want to talk to them about at all, or any numbers in regards to the growth on how this annuity works. The first is that the guarantee is zero, meaning no matter what, their money is safe. Whatever they put in a single premium, it can never go down, because this is not like Annuity Care 1 and 2 that have interest rates that are growing the base. It's an indexed annuity. The base is going to grow in reflection to the performance of the S&P 500 index. But the nice thing is the guarantee is zero. So if the S&P tanks, their annuity will never lose its value. So that's the first thing you want to know. The second is that when they need this for long-term care, that they're going to get to choose between one of two very prodigious LTC step-up bonuses that will further inflate the value of their base, and that's where the real value is with this product. And I'll explain how that works. But once again, as you can see, it looks very similar to all the other concepts. Here's your base. You put a single premium in here. Over here to get a rider, which will give you either 2 times or 3 times the total value of the base, or a lifetime benefit. You'll make annual premium payments on this, or do one single premium for all of it. And this, by the way, is available for people up to the age of 85. But let me explain how the step-up bonuses work on this. It's really quite simple. Easiest way is through an example. So let's use an example of a gentleman that puts in $150,000. That's his single premium into the product. And 15 years later, the S&P 500 did modestly well, and his 150 is now worth $203,000. That was his growth based on the S&P. This is 15 years later. All of a sudden, he needs long-term care. It's 15 years later. He's going to get to choose between one of 2 step-up bonuses to give him even more long-term care growth value on the base of the annuity. How does it work? The first bonus option is based on what the actual value is, right? This $203,000. How does the bonus work? It's really simple. Year 1, we give you a 1% bonus. Year 2, 2%, 3%, and so on up to year 15, where it caps out and stays at 15% from then on. So this is year 15 in this example. His annuity grew to $203,000 based on how the index did, and now he gets a step-up bonus, which at year 15 is 15% more. So we take his 203 and increase it all the way up to $234,000. We just gave him a $31,000 bonus on the base of the annuity, and that's big, because if he chose a rider that was 2 times that or 3 times that, he's going to see that value again even more. So that's the first option. But we have a security blanket here. Remember I tell you the fact that the guarantee is zero plays a part here, because if the annuity doesn't grow at all, then he's going to get a larger bonus to choose from on what his original premium was. That's the second option to choose from. And the way that works is pretty simple. This one starts at year 11, and at year 11, we'll give you a 15% bonus on your original premium. We'll increase that 5% every year up to year 18, where it caps out at 50. So at year 15, your options are a 15% bonus on where your actual value is, which in this case is $234, or a 35% bonus on your original premium. Remember, his original premium is $150. 35% more makes it $202. Obviously, the $234 is the greater number, so his new long-term care benefit balance is $234. So he puts in $150, and 15 years down the road, we're giving him $85,000 more. That's phenomenal leverage on his money, and remember, all of it is 100% tax-free. And the reason why I love the indexed annuity is we only flat-out decline 7% of clients that apply for our products. We might not always approve them for the asset care. We'll say, look, you applied for asset care 1 with the lifetime rider. We can't approve you for that. You have questionable health history, and it's too much risk. But we will approve you for the base of one of our annuity products. And that's where you want to look at indexed annuity, because they're going to get the best value on their base for their dollar if they're just buying a base because of those guarantees, as well as, of course, of the step-up bonuses. And the last thing I'll just briefly talk to you about, I'll spend 30 seconds talking about the legacy care and the immediate care annuity. Legacy care, it's really very simple. It's just a vanilla fixed deferred annuity yielding 1% interest. But what's so valuable about this is we will take deposits up to the age of 99. And that's big for those agents that are in South Florida, because there's a lot of people that are being forced to take distributions from annuities they currently have by carriers because they're in their late 90s and they don't want to do that. Drop that money into legacy care, and it's got a pretty nice comp rate on that. And of course, I'll let Joe and Bill talk to you about that. Was there a question?
Nope, I think we're good.
No.
Actually, Keith, we have a closed line, so just because of the time situation. So, well, any questions,
absolutely.
They can email us or call us, and then we'll get you involved if we have to.
Fantastic. And then I'll briefly mention the immediate care annuity, just because, again, forget South Florida. This is something that you're going to see in every state. This is a fully medically underwritten single premium annuity, and there's a lot of opportunity here. This is for people who are right now needing long-term care. For people that are sitting on 400, 500, 600, 700,000. Maybe they were just diagnosed with Alzheimer's or Parkinson's, and they can live another 8 to 20 years with this, and they're worried about going through all their money. The way this works is you give us a single premium up front, and we're going to guarantee you a monthly benefit for the rest of your life that you can never outlive. I know I just wrote one of these. A woman, she had about 1.2 million, just got diagnosed with Alzheimer's, and was actually physically pretty healthy, and they were worried about her outliving all her money. We took $500,000 from her, so we kept $700,000 of her liquid and her house, and with that $500,000, we're guaranteeing her $10,000 a month for the rest of her life, and the family was ecstatic about it. So it's a really interesting product. Before I close out, because I don't want to go too much over time, I want to briefly talk about underwriting. So with the asset care products, we bring in every application under the assumption of express underwriting. This is fantastic, meaning if they have had a doctor's visit within the last 12 months and the net amount at risk is not more than $250, that's the difference between the premium and the death benefit, is not more than $250, we're going to just take in the application. We'll check with the Medical Information Bureau, we'll do a drug screen check, and then we'll do a telephone interview. And only if they're over 60 will we do a cognitive screen. So phone interview, MIB, and drug screen, that's it. We're not going after parameds, and we're not going after medical records unless we see something that comes back from the telephone interview or drug check that we don't like. On the annuity products, we never do paramed or go after APS. If they were just to qualify for the base alone, it's a 5-question application, and it's all the majors, Alzheimer's, stroke, Parkinson's, internal cancers, what have you. To get the rider, we just do a telephone interview, drug screening check, and MIB. So look, I just threw a lot at you. I know I did, and I'm very confident you guys understood all the concepts that I said. And you know what? You're going to go back to your day, today, tomorrow, what have you, and say, wow, that was good stuff. What was the one that was the qualifier? What was the one that was the annual? Don't worry about that. Walk away today saying, wow, I've got clients with qualified money. I know where my opportunity is. I've got clients I know I put into annuities. They're not using them for income. I've got a great opportunity there. I have clients that have traditional LTC policies that are getting slammed with 125% increases. Why are they doing that? Let's put them into something like this. Maybe they'll pay a little more, maybe they won't, but they'll get guaranteed premiums, lifetime benefits, liquidity, and death benefit. I have a place for that. Don't worry about remembering the products. Just know where the opportunity is. Call Levinson. They'll run an illustration with you. They'll walk through this with you again. And Bill will tell you, I've known him a long time, I love working with you guys one-on-one if needed. If you want a little more training, you want me to go over an illustration with you, I'm a roll-up-your-sleeves kind of guy. I'm happy to do it. So, Bill, I don't want to go over too much. I look forward to seeing you guys at the expo. And you know, any questions that you want me to answer now, or do you want me to forward over to me? I'm always happy to do so.
Yep. Thank you very much, Keith. Great job. We're gonna send out an email to everybody that's on the call, and we'll include licensing and brochures. Everything that Keith went over will be in that email, and then of course call us for anything that you need. Okay, we have just about 2 minutes left, and we're going to do a shortened version here in the essence of time, and I apologize, we went a little over. It's our fault. So real quick, just jot down these notes and dates, very, very important. Todd Ewing, who is the premier D2C, that's direct-to-consumer consultant training coach, okay, is going to finish up. We did a 3-part series. The first one is over. The second one is March 9th, 2 p.m. Eastern. The third one at the very bottom is April 6th, and that's 2 p.m. Eastern as well. We're going to finish up the training. By the time you're done with this 3-part series, you will be a professional closer on the phone, and I don't care if it's long-term care, life, annuities, whatever it is. He gives some great examples on how you can sell some monster cases over the phone. Don't miss that free training to all active Levinson agents. March 9th, April 6th. Okay, moving forward here, like I said, we're just about done. The Levinson Expo, in fact, Keith, that was just speaking live, is going to be at our expo on March 31st. We bring in all of our top VPs and underwriters from around the country. We even have a peak performance strategist coach from Tony Robbins himself. Will be our keynote speaker. So we have some awesome stuff. That is going to be a day you do not want to miss. Great networking, great meet and greet. You'll meet all of the Levinson staff there. We bring in breakfast, lunch, snacks, dinner for the out-of-towners, and then, of course, qualify for a free weekend stay round-trip airfare. Okay, and the qualification minimum is just $15,000 for at least one free night. So even if you're new with us, you haven't written anything, this is free for everybody. Jot that down, March 31st. So that's just less than 2 months away here. Okay, we'll end with this. And as everyone knows, it's all about motivation, energy, positivity. I mean, we have to get the message across. Okay, and we have to be in the right mindset to come to work every day and pick up the phone or meet clients in person. You have to be in that right mindset, or else you're not going to make sales. People understand and they know where your head is mentally. So the only way to be productive and successful is to get in that right place, okay? And like I said, we're going to have our keynote speaker on March 31st. Who's personally trained and is Tony Robbins' right hand. So the guy is incredible. That will be also another way to make sure that not only for that day, but moving forward in the future, that you're in that right place day in and day out. So we'll end with this. The cost of ambition, early mornings, late nights, many associates, but very few friends. A lot of people will misunderstand you. You'll be single unless you are lucky enough to find someone who understands your lifestyle. People will want you to do well, but never better than them. And for these reasons, you will do many things alone. I think the point behind all of this is no matter who's watching or listening or paying attention, you have to do the right thing and make sure you're driven day in and day out. And when it comes to making a right or left turn, always go in the right direction. And here at Levinson, we have you covered as far as insurance products, technology, marketing. We're showing you the way. All you have to do is simply hold our hand, and we'll take it from there. With that said, have a great rest of the week, a good weekend, and great selling. Take care.